This indicator allows you to use extremely powerful concepts that are usually only used by very experienced traders, allowing them to trade with confidence and stay profitable. These concepts include volume price analysis, also known as VPA, and the Wyckoff law of effort versus results. The indicator we are talking about is the red K-Everix effort versus results explorer. This indicator combines and displays the previously mentioned powerful concepts in order to make it easy to understand how they can be used and read, allowing both beginner and advanced traders to potentially enter into extremely profitable positions. Let's first add the indicator to the chart. Navigate to the Indicator Search tab and search Red K-Everix indicator. Select the Red K-Everix effort versus results explorer indicator made by Red K Trader and add it to the chart. Now that we have selected the indicator, we can see that it was added to the chart. The indicator consists of the following components, the first of which being the smoothed relative rate of flow line, also known as the RROF line. The indicator calculates the values of relative volume and relative price strength, then it combines these values in order to create a moving index that can be used to track overall strength and detect reversals in market direction. The relative rate of flow line oscillates between the values of 100 and -100. By looking at the value of the line, we can determine if a bullish or bearish signal is given, along with the strength of the signal. The second component of the indicator is the smoothed RROF line. This is the gray line that closely follows the RROF line. Signals are given when the smoothed gray line crosses the RROF line. The next component of the indicator is the bars that are displayed behind the lines. These bars represent two things, the first of which is volume. Volume is a measure of the number of shares or contracts traded during a given period. By looking at the length of the volume bar, we can determine how much bullish or bearish volume is currently present. The second aspect represented by the bars is the price. This can be used to gauge the intensity of price movements and identify potential signals. By analyzing the height and color of the bars, traders can assess the strength of price movements and identify areas of buying or selling pressure in the market. The final component of the indicator is the Everix marker. There are two markers, the first of which are the green and red triangles, which are for the ease of move or EOM. The next marker is the circle, which will also be either green or red and represents the churn bar. Now that we know what the components of the indicator are, let's change the settings of the indicator. In order to do so, head over to the Indicator Settings tab and click on the Inputs tab. The first setting we see that can be changed is for the rate of flow. As you can see, it is possible to change the length, moving average type and smoothing. However, we will be keeping these settings at default. You can also see that the length can be changed for multiple other components of the indicator. Despite this, the only input setting we will be changing is for the Everix markers. Scroll down to these markers and uncheck them in order to disable them. Now head over to the style settings of the indicator. Here we will be increasing the opacity for the volume bars in order to make them easier to see. Once you have done that, we will be changing the color of the bullish price band to blue to also increase visibility. Finally, navigate to the style settings of the levels. We will be keeping two levels enabled. One of these levels will have a value of 50 and the other will have a value of -50. That was all that we needed to do. Now let's understand how we can read the indicator. But before that, if you are looking for a crypto exchange where you can hold or day trade crypto, then check out Bybit. They currently have some of the lowest fees along with many trading possibilities such as spot, derivatives, NFT, and even options trading. Sign up via the link in the description to get up to a $30,000 sign-up bonus along with zero maker fees for the first 30 days. Here we can see that the price is in a downtrend. We can also see that the RROF signal line has crossed with the smooth RROF line while being below the -50 level. This suggests that the market is oversold and that the price might start heading in the upward direction. Despite this, we will not enter into the position. This is because if we analyze the volume and price bands, we can see that the bullish volume band is lower than the bearish volume band. Along with this, we can also see that the bullish price band is short. Because of this, let's wait for the price to develop further before entering into a position. We can see that a new crossover was made by the RROF lines. This time, if we analyze the volume and price bands, we can see that the bullish volume was higher than the previous bearish volume. By looking at the bullish price bands, we can also see that these are taller than bearish bands and steadily increasing. This means that the price is increasing while the volume is doing the same, making it likely that the price will be pushed higher. When we combine this with the oversold signal provided by the RROF lines, it becomes a good idea to enter into a buy position. Because of this, we will be entering into a buy position here. We'll be placing the stop loss at the recent swing low. For the take profit, we will be targeting a recent swing high, aiming for a risk-to-reward ratio of at least 2. Now let's see how the trade plays out. In this case, we can see that the RROF lines made a bearish crossover while being above the 50 line, indicating an overbought signal. Despite this, we won't enter into the position due to the short and decreasing bearish volume and price bands. This indicates that the market will either continue in the bullish direction or consolidate due to the lack of volume. If we take a look at how the price action develops, we can see that the market indeed started consolidating, as indicated by the signal that was provided. From these use case examples, we can already see how powerful the indicator is. Even though this is the case, the indicator can provide counter-trend signals. This is because it doesn't track longer-term trends. Along with this, it is important to not enter into positions with this indicator when there is a low amount of volatility in the market. Because of this, let's add a few indicators to the chart in order to make a full strategy. Navigate to the Indicator Search tab and search for the Pivot Point Supertrend indicator. Select the indicator made by Lonesome the Blue and add it to the chart. The second indicator we will be adding to the chart is the ADX indicator. Search for the ADX indicator, select the indicator made by TradingView, and add it to the chart. Now head over to the input settings of the Pivot Point Supertrend indicator. Here we will be removing the buy and sell labels. Once you have done that, we will be adding a horizontal line on the ADX. Navigate to the toolbar and click on the horizontal line tool. Now place the line at the value of 20 on the ADX. That was all that we needed to do. Now, let's take a look at how we will be combining the indicators. We will be combining the indicators by first using the Pivot Point Supertrend in order to identify the longer-term trend. Next, we will be using the red K-Everix indicator to identify an exact entry point and confirm it. Finally, in order to validate the entry and see if there is enough volatility in the market, we will be using the ADX indicator. Now let's take a look at how such an entry can be made. We are currently looking at USD/JPY on the 1-hour time frame. Here we can see that the price was in an uptrend. This is indicated by the green Pivot Point Supertrend indicator. We can see that during the uptrend a small bearish move was made, indicating that this might be a good time to enter into a position. If we analyze the red K-Everix indicator, we can see that the RROF lines made a bullish crossover below the -50 level, indicating that the market is oversold and might start heading in the upward direction now. If we analyze the price and volume bands on the red K-Everix indicator, we can also see that both the bullish price bands and bullish volume bands are steadily increasing. This shows us that there is enough bullish volume and momentum to push the price further in the upward direction. Finally, if we look at the ADX indicator, we can see that it currently has a value of 21. This means that it's about the 20 level, indicating that there is still enough volatility in the market to provide the trend with strength and avoid consolidation. Because of all of these signals, let's enter into the buy position here. We'll be placing the stop loss at the recent swing low. For the take profit, we'll be targeting a recent swing high, aiming for a risk-to-reward ratio of at least 2. Now let's see how the trade plays out. In this case, we are looking at GBP/USD on the 1-hour time frame. We can see that the price is in a downtrend. We know this due to the Pivot Point Supertrend indicator being red, indicating a bearish trend. If we take a look at the price action, we can also see that a trend line can be drawn here, due to the price pulling back and retesting it multiple times. By analyzing the red K-Everix indicator, we can see the following. First, we can see that the RROF lines recently made a bearish crossover above the 50 level, indicating that the market was overbought and might now be heading in the upward direction. Along with this, if we take a look at the price and volume bands, we can see that they are bearish and steadily growing. We can also see that the most recent bearish price and volume band is greater than the most recent bullish price and volume band. Finally, if we take a look at the ADX indicator, we can see that it's above the 20 level, indicating that there is enough volatility in the market to push the price further in the upward direction. Because of these signals, let's enter into the sell position. We'll be placing the stop loss at the recent swing high. For the take profit, we'll be targeting a recent swing low, aiming for a risk-to-reward ratio of at least 2. Now let's see how the trade plays out. As you can see, here we have the pivot point supertrend and the price and volume bands of the red KFRX enabled. However, along with these indicators, we have also added the premium Luxalgo signals overlay indicator. By combining the signals provided by the premium indicator with the signals provided by the pivot point supertrend and red KFRX indicators, it's possible to enter into extremely profitable positions. If you are interested in getting access to the Luxalgo premium indicators, check out the link in the description to get them with a 30-day money-back guarantee. I hope you enjoyed the video and understood how the red KFRX indicator works, and how it can be read. If you did, please leave a like and subscribe to the channel.